This is your money moment with your boy Mark.
And your girl Mona.
And today we're continuing the episode with auto loans, the series.
Yes.
Once again, before we jump into the episode, we got a little blurb for you guys.
He always want to start. He said I was going to start the blurb. Now look at him. But anyways.
Whatever. Just tell people what we got.
We're talking about loan deferrals. So right now it's an unprecedented time. There are a lot of people who are unemployed, not receiving income, or even some people, even though they might be receiving unemployment, it might not be the same that they were receiving previously when they were employed.
Well, unemployment checks they kind of higher than what people are getting paid at work.
Those checks I'd be like, I don't know where to go.
Why go back to work?
I don't know where all the government, where did they get all this money
from? What do I need to go back to work for?
I don't know. But anyways, for those people who aren't receiving unemployment, which some people still aren't, because there's millions of people who are filing for it.
Yeah.
You can get a deferment on your loan. So really what a deferment on your loan is adding months to the end of your loan while you're not making your monthly payments. A lot of lenders are offering this for members because they know it's an unprecedented time that you can't pay your bills, but you will pay them in the future because you're adding to your loan, to the end of your loan, instead of paying it right now. So really it's a win-win for both parties, because instead of the lender having to repossess the vehicle or foreclose on the home and not getting what is actually worth for the vehicle or the home, they're just giving you a little bit of time until you can start resuming your payments back. So it works out for both parties. So if you are in a situation where that's something that you need, contact your lender, see if they can work something out with you. Or even if they can't do a deferment, see if maybe you can make certain payment arrangements where maybe you make a half payment until, like partial payments until you make your full payment. Just something that would help. Something. A lot of lenders do appreciate when you make at least an effort, that they see that you're trying. But at least communicate with your lenders, because if you don't communicate, then they're just going to continue with collection efforts.
All right. And then it'll impact your credit.
Right. In a negative way.
All right, guys. So on the last episode, we kind of tiptoed into the negative equity aspect of an auto loan. So I want to share my own personal experience with this particular term. So I had a Nissan Maxima 2004, leather seat, sunroof, heated steering wheel, heated seats. You know, had the tint on there. You know, V6. You know, 6 CD changer. You know.
Wow.
You know the everything.
The what?
Everything. I had everything on that.
Everything.
On that car.
But
I owed more than what the cars were.
Crazy. Isn't it crazy when you owe more than what the cars were?
And you know, so I'm making payments, and you know, my loan payment is not going down. But the value is still it's low. It's getting low and low and low. And it was a tough situation for me because all I was doing was making the minimum payment every month. I had a loan term for like 5 years, but I want to say within 2 years I was already it's another word they use for negative equity, which is underwater. So
drowning.
So I was drowning essentially. So if you find yourself in that position, which a lot of people are, one of the things to do is to try to make extra payments towards the loan. You don't want to trade the car in, because if you trade the car in for another car, what's going to happen is
you're going to start off with negative equity.
Yes, because what will happen is the loan will never be paid off. The thing that will happen is that difference between the value of the car and then the loan will get rolled over to the new car loan. So you don't want to trade in the car. That's a no.
I mean, some people might have to. But if that's a thing that you have to do, then do it. But like we said before, if you're trading in a vehicle that already has negative equity in it, then you'll be rolling that over to a new loan. So say a car dealership is paying $5,000 for your car, but then you have like $3,000 left to pay on it. Well, $3,000 more than $5,000, so $8,000. Let's start with that. So that'd be $3,000 that you'd be rolling on to the new loan. So that's already $3,000 you're adding to the vehicle that you're already buying. And who knows if you're buying that vehicle for a good value already. So you're starting with negative equity in that car.
And it's a cycle.
Yeah.
It's like,
so we try to be proactive instead of reactive. So if you're going to be proactive to avoid this situation, think about the term that you're choosing for the vehicle. Like a lot of places, they'll offer up to 96 months, but do you really want to stretch a term out for that long to pay for a vehicle? And think about the interest rate that you're paying on the vehicle. So say you have a 20% interest rate on an auto loan, you're paying 20% interest every time you make a payment, and so you're not making that much towards the principal as you could have if you had like a 4% interest rate, or even a 5-10% interest rate if you're paying 20%. So always think about that, because every time you make a payment, you're making more towards interest, so your principal balance isn't really going down, and that's what you want to focus on. Or even think about making extra payments on a loan, like Marcus was saying. If you're making extra payments each month, you're paying more towards the principal. You're paying that balance down faster than if you were just paying that minimum payment every month, just like any other loan.
all right.
And then your credit has to do with that as well. The better your credit score, a lot of times, the lower your interest rate will be. So that credit aspect always comes into play whenever you think about any kind of lending or any financial decisions.
Okay, so yeah, we actually touched on interest rates, which is a significant part of the auto loan itself. So the interest rate is always you ever see the letters APR, annual percentage rate? So basically, that's the total amount that you will pay in a year.
Yeah.
Total amount of
That's
interest
expressed in a yearly.
Right.
Percentage.
So every time you make a payment towards your auto loan, a portion is going towards the principal and a portion is going towards the interest. Right?
That's correct.
I was correct?
Yeah, good job.
Oh, okay.
Proud.
So car loans are considered front-loaded. So basically, every time you make that payment, more of it's going towards the interest towards the beginning, and then as you are paying towards it, it'll start going more towards the
It's just
principal.
like mortgage loans are too, as well. I got my mortgage interest statement. I was like, I paid all this towards interest.
Yeah. Yeah. So that's actually how negative equity can work against you, because all of the money that you're paying is going towards the interest. You know what I'm saying? So that's why, what we're saying about looking at shorter loan terms, if you can afford it, shorter loan terms, or paying more.
Or making a down payment when you buy a vehicle. So you're paying less for what the value of the vehicle is. So that's a good thing too, like we were talking about in the previous episode, to getting ready for those things. Like maybe if you save up a certain amount, like this is how much I'm going to put down towards my vehicle, so my vehicle will only be this much, so my monthly payment will only be this much. So you're saving on the front end if you can put a down payment on that. So that'd be a good thing.
Cool.
So,
should I finance or should I lease a car?
I've heard either. But I mean, I've had people like swear on leasing.
Yeah.
And then I've had people that like swear on financing.
To be honest, I've never leased
a vehicle. I don't know. I feel like I have a thing of like an old people thing. Does that make sense? Like I feel like I only know old people that lease vehicles.
Well, I mean, there's some millennials that lease cars out there.
Who?
I'm not gonna name no names. But yeah, so I mean, what would be the difference, versus financing and leasing? Well, with financing, of course, you're making you're locked in for a loan to a specific vehicle for a period of time, and then leasing a car, you have a contract, and then you have to stick within that contract until it's up, and then you can determine whether or not if you.
Or you can buy it out. You can buy it out. I have some people, they bought out their lease, so they either financed it somewhere by buying it out, and so they're working towards purchasing it, or some people just, after their lease is up, they just decide they're going to lease another vehicle at that time once they're done. I mean, the things that I know or heard about leasing versus financing, with leasing, like you said, you're not leasing it to own it, so you won't one day own this car that you've been leasing for however long of time. There's certain restrictions on leasing, like normally there's like a mileage restriction.
Even like little damages and stuff like that. Then with leasing, you don't have to worry about depreciation.
Normally the payments are a little lower monthly when you're leasing.
Right.
So I'm trying to think, what did we talk about today?
Negative equity.
Yeah, I know we talked about negative equity. How it's negative. It's a negative thing. It's negative equity. How you don't want to owe more than the value of the vehicle.
Right.
A vehicle's a depreciating asset.
Yes.
We talked about trading it in or selling it.
Right.
Which would be a better option. Also talked about interest rates, how interest rates can affect your monthly payment or not, how that it can affect how much you're paying towards the principal or your interest during the month.
Yeah.
Also talked about financing and leasing, pros and cons and pros.
Yes.
So hopefully this helps you next time you're getting the loud hair of buying a vehicle. Things to think about before you even go to the dealership, or before you even get on your computer and search now from your couch.
We'll catch you next go around. Mona tripping today. Appreciate you tuning in. Like and subscribe to the page, No Fluff TV. And this is another Money Moment with your boy Mark.
And your girl Mona. Peace.